Hello, traders. All right, let's turn off the echo, make sure the music won't come back on. I think we are good. All right, this is Red Ben. It is Wednesday, June 14th. The June FOMC decision and press conference came out today. Um, there were quite a few opportunities that we're going to look over. If you want to get a hold of me, the easiest way is on Twitter. It's at Red Ben Trader. And then if you want to learn more about the algo or the futures trading room I trade in, you can talk to my coach, Simon. His email is trade, the letter N, and the word perform at gmail.com. So feel free to give him an email. If you want to request a 5-day free pass to the room, you can do that. If you mention that I offered that, he'll give it to you. I can't guarantee that there's going to be space in the room, though, to actually join right away. He only takes a few students every month, new, and it if everybody catches up and people are doing well, he'll take on another one. But he doesn't want current students to get held back by like too many new students. He's really not that interested in like growing, but he is interested in helping, and I've found his methods super helpful. And yeah, it primarily because of the algo. So the algo that Simon is using in the room looks like this, or something like it. This is a little bit of an older version of it, but it's just got a couple signals that let us know when certain things are occurring either on the footprint or on the DOM or the time and sales. Whereas what I've done is I took that algo, where'd that go? So I took this and then like changed some colors just so that like I liked how it looked, and then I added slowly over 2 years different signals to in the same way to alert me to things that I feel are important based on trade setups that I already had, but I was triggering them with the like actual analysis, like watching the DOM move and trying to make a judgment call of like this is an increase in speed, or watching indicators and seeing when they are divergent, for instance, and then only applying that when there's enough volume, right? Like you have to build the conditions. Everyone should have that already. If you're trading a system that has, what happened to our live? Oh, they closed, right? Is it the highs? No, but near. Oh, if yeah, more or less the highs. That makes sense. It was so yeah. Everyone should have the conditions worked out for what your ideal trade looks like. Yes, you can use something like a candlestick chart to find that. You can use a Renko chart like what we use, or you might also use the footprint or a DOM time and sales, uh, just like watching and remembering what you saw at certain levels. You can use a profile, right? All of these things are that's stuff we use too. The only difference is that we've programmed a lot of the things that are happening normally on other charts, like and in addition to the DOM and the time and sales and stuff like that, we've programmed that those conditions into signals. And so those signals uh, basically tell me that some condition is present. I'm not going to go into like explaining all of the signals. There's a lot of them. If you want to learn more, like I said, you could talk to Simon, or else you can. I've made a ton of streams and videos on some of my favorite signals and setups and stuff like that. So like if you're interested in that, it's the information is there. You just have to dig for it a little bit. But just know that like it does take time to learn how to interpret all of this, right? It just like it probably took time if you know how to interpret the footprint or like other like volume analysis and order flow trading, like any of those tools, it's going to take time and practice to really learn how it works and what you're looking for and stuff like that. The good news is the learning curve on this, well, particularly Simon's, the simpler version, like if you want to learn setups on Simon's version of the algo, it doesn't take that long. Realistically, you can probably master a setup within like 2 to 3 months if you work at it and like if you do coaching with him, you may be even a little faster. But like the truth is, most people require about 3 months before they really get it. But honestly, that's not that bad, you know. And the fact that the algo does the work for me of in basically looking for the conditions that I already told it to look for means that like my brain power can be focused on just watching and waiting for the setup. So let me show you what we had coming into today, because it's while you don't want to be overly biased, I personally feel it's important to have a bias of like what you expect to happen and what's been happening, because otherwise you're going to struggle with like not knowing where you're looking for things to happen, because while the algo can, it's like an execution tool, right? I can use it to like interpret what's happening in an order flow, but the time frame that it's looking at is very, very, very fast. And the because it's meant for day trading, you can apply it to higher time frames, but I'm not regularly watching those. Like I do look at them as like a process of preparing for trading, but I'm not watching those on like live, right? I've only got two eyes. I can only watch a few things at a time. So you can't have like every time frame up looking for signals. So when you go into the day, it's really important to like review and have some context of like what's happening in this market that I want to trade. Do I want to trade it and where? Because the market, I mean, the algo is not gonna discriminate between locations that on a higher time frame that have high expectancy versus lower expectancy, and it's also not necessarily gonna interpret higher time frame like change in pace. It can interpret very fast changes in pace, so things like this is the bar that like closed the fastest, or this bar is closing faster than expected, but it's not going to be able, it's not sophisticated enough to like look back and say, based on the fact that it's been slow for the last 2 days, while normally this is a normal speed, we should interpret this as fast, right? It's not going to be able to do those contextual analysis like our brains can. You could, I'm sure you could do it. Like you could try to turn, it should be objective. So you should be able to turn that into a like automated system, but it's every day is a little different, right? So it's a lot easier just to, in my opinion, and my coaches too, just to learn how to analyze context with the algo as well as other tools like the candlestick chart and the profile and things like that, rather than taking the time to try to put all of that on the algo's shoulders. And instead, we can just let the algo do what it's good at, which is determining whether or not conditions are there or not. And then it's our job to kind of say, I care about those conditions at this location or I don't. So there are, like, right away when I start the day, I'm immediately looking for do I know which side of the market I want to be leaning on? I might still counter trade trend if I have an opportunity at a location that I like, but I need to know going in, like, if one side is clearly in advantage to the other, because a lot of times there is very clear advantages, and there's locations where if the market responds at certain locations, you're going to have either confirmation of that trend or possibly evidence that it's ending. So if you don't have that context in mind when you start, even if you have the algo telling you, like, conditions are met to take a trade, you won't know what your expectancy on that trade is beyond the current time frame. You're not going to have any guess unless you've been watching and just kind of taking mental notes. You're not going to know right away if, like, shorts are having a hard time, like, extending further than they should be. You're not going to know whether or not, like, we maybe had a double bottom and a poor low that will likely get repaired before we go higher. Like, things like that you find on the candlestick and the profile. If it's bigger than the intraday, the algo probably is not taking that into account, because, like I said, it's just not that sophisticated. That's not what it's meant to do. So when I came in today, we had yesterday, I believe it was CPI, consumer, I think, or was it PPI? I forget. They're both one way or another. There was an economic release pre-market here on Tuesday that had an effect of producing a range. See that? So this is pre-market, and then this is the open. This time on my candlestick charts on the trading view screens is in Eastern, but the algo is in Central because Simon's on Central, and whenever I'm sharing ideas, we confuse each other by trying to explain who's like what time it actually happened. So, but on the candlestick charts, because I primarily use this for higher time frame analysis, it needs to be, it messes up, like, your bigger time frames, in my opinion, if it doesn't align correctly. It has the potential to change things like weekly charts and stuff like that. And, like, I want to look at what everyone else is looking at so that I'm not, like, missing something. So since I'm looking more than just a day, I keep it at Eastern, where New York is. So pre-market, we had a bunch of volume. You can see that they first pushed down. They ran into a level that I had identified on a higher time frame. Here, this little move here, like, showed it. It had decreasing volume and decreasing range. And if you watch my video about the voodoo range levels, you'll see that I explain how to find those levels and why they're important. But the basic idea of it is, no matter what time frame you have, but particularly on the higher ones, like 2 hour and above, but it also works on the 30-minute, and probably smaller than that too if you're quick. But once the market does this, where volume is actually decreasing, and at the same time you have range of how far the market moves in that period also decreases, and one goes in one way and the other one closes the other direction. Those are the rules. Once you have that condition, the high and the low of that those two periods can be marked, and in the future, it's likely that they will be important because, well, I go into it in the video. I don't want to spend too much time on that, but you could have identified with, if you watch that free video and actually track the pivots, you could have found that and then known to be looking for that low to hold. Now, when I say hold, and this is something people misunderstand all the time with the voodoo range levels too, it doesn't necessarily mean that we don't ever do any trades beyond it. This now this will change depending on what time frame you're looking at it, but this is a hold. I know it traded underneath the low, right? It's not a brick wall. This isn't magic, right? Like it's not voodoo. It's just math. And just like this level also got traded behind, but it held. And you don't really know that it's going to hold until you see what's to that level. So you can't just put your buy order here and get filled here and always make money. It just doesn't work like that. Instead, you have to let it do its thing down there and then know what to look for to actually have evidence that they're holding. And that's where the algo comes in. I would know the location that I'm looking for a trade, but on the candlestick chart, you don't necessarily see the hold. Now, we could go down to a very small time frame and we would see potentially something that counted as a hold. In this case, it was this, what we call a trap back in. So we make a low, test below the low, and then come back into here, closing bullish, and then a pullback holds. So this big bar right here, if you look at volume, it's the big volume bar and the big range bar. That's going to usually be the turning point, right? And so, like I said, we knew about the level way back here, and you have to let the market go where it wants to go and then wait for a spark like economic releases or FOMC to come down and get back to that level. And then you watch to see what happens. Now, the hard part is you can't just say it had like no candle closes below it, because that's going to completely depend on what time frame you're using, right? What really matters is, like I said, what happens under there. And so if you're watching the DOM, if you're watching the footprint, or if you have an execution tool like the algo, you can learn to identify it on this bar rather than this bar, right? But even with a candle chart, if you knew to watch this level and you knew if we test and hold it in general, right? Not a brick wall, but we either get under it and find no more sellers, and so buyers end up squeezing them, or we get under here and, well, I guess it would be get under here and trap somebody and then squeeze them. Otherwise, get down here and exhaust and then basically run into like a iceberg or something like that, where like buyers are just not gonna let it melt any further. And if there's not, if all the momentum is exhausted, it's got no choice but to go up. This, like I said, the levels will tell you where that's likely to happen. You just don't know when. And even when they get tested, you don't know that this is going to be the time that holds. Like, for instance, if you were doing this one candle at a time, even on a 3-minute chart, and you're like, okay, I know that purple level is important. I identified it like the previous day. And now we've tested it. So let's see if we can collect those stops and bounce. That might be the first spot that I'm willing to take a higher time frame long. And then you look and you say, oh, well, I've got this voodoo range level underneath that. Those will often be targets for the high frequency traders to try to get to. So let's see if we can do that. Well, if you see here, they got to the target, right? And then they closed back inside of this one. And so if all you're using is a candlestick chart, you might be like, okay, they defended it. Like, that's not enough, believe it or not, because volume is increasing, you're dropping, you're closing candles to the downside repetitively, and you haven't broken over any swing. So it's not necessarily over. And then you see this one, and yes, they didn't break the low, but they could do that the next time, right? There's no change. Now we have tested below it. Why can't I grab that? There we go. We've tested below both of these important levels. This one appeared to hold, right? And then we came back up over these little like micro swings. And note here, there's like no volume down there when they were consolidating, preparing to break that low. And then they break the low and they bounce, and still very, very low volume. So what do I want to see? If I'm going to be a buyer, I need to see volume, because I don't see any sellers being trapped down there unless they got trapped here. But with the candle chart, I don't know where the volume was, right? I need something more for that, like the algo. But without that information, if all I have is this and the level, well, then I just need to see them continue and break a true swing, right? So these are like little micro swings that says like that little rotation might be over, but who's to say that the next rotation won't just go lower after that, after a little retrace, right? The only way to really know or be confident about it is to exit this pivot or take a swing high and then basically hope to get a pullback. So here it runs into this blue would not have been there yet. It just ran into this previous low, but the blue is the what is it? It's the volume area high or low? Volume area low. But I'm measuring all the way to today, so it looked different yesterday. But really what I want to show you here is this. So even without the algo, if you're new to watch this and you're not getting too antsy about it, you see them lift, volume decreases. So it's like, okay, I'm going to chill here, see if they try this again or what happens. Well, they do try again and they knock on the door again, right on the level. And then look what happens after that. Boom, right? Big volume relative to like what we had down here. It's like, if we get any continuation beyond that, we might actually be going higher, right? That's what my thinking would be, is like this level is now like the important one, right? Now, doesn't mean we can't break down here. No, we totally could. But if I'm on a short time frame, for now, I just want this to hold now, because now we've tested underneath it, we've held it, and we've got this little micro pullback. So on this time frame, I want to see us go higher, and I want to see volume come in when we do, which happens right there. So the aggressive trade is probably in this bar, right? Once we get over this. The more conservative trade is the pullback into that level. And again, you wouldn't have known that the volume area low is there, but you had the previous support that could have become like a new support, almost like a head and shoulders kind of thing. And then you didn't have as much volume on the sell here as you did on the consolidation, which means, because if I know it doesn't look like much, but it does matter. Like, you've got lots of sellers trying to defend here. Let me move this up. So look, lots of sellers, more than average, right? Maybe somebody got stuck down there. They tried to go lower, no sellers, like super low. They squeeze out, right? And then volume decreases. And I know it's bigger than the previous one, but what's actually more important is comparing it to the previous sellers in the same or lower price. So look here at the low one, look to the left. Is there sellers, a sell bar equal or lower to this one that had less volume, right? That's what you're really asking. Or sorry, more volume. More volume. Yes, both of these had more volume. Actually, this one too. All had more volume than this one. So they were attacking harder the first time than they are on this last defense, what I call a last defense. So this is the push where they get trapped. You don't know for sure that they're trapped here. It's just a possibility. Then we pull back again on less volume, meaning they were less committed to selling that same exact level, whereas before they were putting in a bunch of volume and then suddenly no more. And what do you know? We get a rip, right? And that level then, actually, it's this breakout, becomes extremely important to hold in the future. So what you'll see is a pullback often either to the 50% of this or even the 62. I'll show you what that looks like here. So low to high, 61.8 to 50, right? So first they did that, but then if you measure from this one, they held it. See how you can't get through that? They're bouncing before that, which is, you only see that when it's only going in one direction, if you think about it. Normally, if like when we're going down, this is the biggest pullback, right? Like, so if I measure this, how big of a pullback is that? Well, here's the 61.8, right? It did get further than that, but it closed under it. And this one too, right? You can't develop any volume up here, really, most likely. I can't see the volume, but if I had to guess, it's probably down here. And same exact thing here. You can eventually, you just kind of see these things, like you see the pitch of the move, and the pullbacks are not as severe and not even half as severe as the lifts. And that's just something that only happens in a trend. Now that trend is on a 3-minute chart, right? So it's way more important to know on the big chart, where are we, right? Because when that 3-minute uptrend runs into sellers from the 2-hour chart, that 3-minute uptrend is not going to matter, because the higher time frame traders are far more important. They're bigger, basically, and they can hold longer, so they have like bigger risk. They're willing to hold and let their orders or their positions go off sides. So if you look here, that's what we just looked at, zoomed in, right? So it lifted and then it tried to pull back, and you can measure this one too if you want. And you can see the 61.8, they couldn't get a close under it. Right, so that's it. It's just further evidence that it's just not bearish on that time frame, and so this low, that pullback low, becomes important. Plus, you well, not there. So one way or another, what I was trying to get at is that yesterday we had a bullish close, but the entire day was actually range bound, what we call a normal day, because it's normally distributed more or less. So that's when I start drawing these volume profiles. Now, I don't necessarily start it at the open. I want to start it when we entered that price zone and the opposite side started to attack. So here we were bullish, right? So if I see this and I'm like, oh, we're balancing, right? We're in a balanced zone, some kind of consolidation. I want to measure that volume profile from the point, you'll see it on the 2-hour, the point where sellers actually started pressing for the first time, which is here. See, it's bull, and then there's a attempt, and then we go higher, and again, we don't know about today, and then we produce this range yesterday. So if I want to know where the volume is, I don't care about this one, right? And this one, it could just be a continuation of this because they never took that out in the day. They didn't close below it and reject and go lower. So I'm not that worried about this one either. The level is important, but when it comes to measuring volume for the balance zone, this is still part of the lift, right? What I'm looking for is the consolidation, the balance. That started here. And so you can measure where all the volume is. And if you adjust this to what we saw then this would be at the close, okay, of the day. What we had there was the value area of that balance zone was between, let's say, 15,025 up to 15,105, give or take, right? And then the VPOC, the price with the most volume on it, was basically centered right here. And then there was a little like dip there, but it was within the volume area. So I'm not that concerned about that. More or less, what I'm looking for here is, first of all, is it normally distributed? And I'd say, generally. But is there a asymmetry to that normal day? And the answer is yes. This up here versus this is different. Okay? Hopefully that's clear. The value area on the high is a high volume edge. See that big difference? Whereas the low volume area here, it was a nice taper. So generally when you see that, we're going higher. Again, totally a generalization, but if you're noticing that asymmetry, what the market usually wants to do is come back up here and try to trade in here. And then if there's no buyers, it'll sweep through the value area and come back down here and just possibly go lower, or else come back up, tap the VPOC and then go lower. But one way or another, the next move is usually back to this to test this asymmetry and potentially, quote unquote, repair it. And if you don't know what I'm talking about, read Jim Dalton. His work is really good. All of his books are great, but like Trading with the Profile, I think one of them is called. That's the newer one. And then Mind Over Markets is the original from like the early 90s, I think it was. All that stuff is still relevant. It's Market Profile is still relevant, and you can apply it to Volume Profile. And if anything, I think Volume Profile these days is actually even more relevant than Market Profile. But more or less, all of the theories are all the same. And I say that because things just move faster these days. So in a day, there's a lot that happens. So, okay, so that day closed at near the high of the value area. And the bigger picture is clearly bullish. So, and like I said, there's an asymmetry up here at the top. Sorry, still getting over a cold. That we're probably going to come up there and test it and see what's going on. It doesn't mean that we can't go lower, but usually we're going to come up here first. So and then during the economic release, notice we put a high in up here on what were probably single prints. So this area up here also wants to be tested. We want to make sure there are more sellers than buyers there. And if there aren't, we're going to squeeze and take that liquidity up there of the sellers who sold here and put their stop up there. So that's an easy target. And when you look and you have a voodoo range level above that, that would be a pretty good target for a long. And then, like I said, because of the asymmetry of the volume profile, This level here, 15,123.25, is probably also a pretty good target. Whereas the ones in the middle, you're probably just going to sweep back and forth in there. There's not going to be a lot of fighting inside here. And that's extremely important to understand when you're using basically any intraday trading technique, including anything you do with the algo, because the algo is not filtering the signals that might show up in a fair value. It's going to show us everything. It's my job to know where to trade and which ones to ignore. So if I get signals in here, in this middle value area, I might want to either ignore them or at least refer to the higher time frame to see what's going on, because I don't want to fight the sweeping that's likely to happen through this value area. And it doesn't matter what time frame you're looking at. If you have balance with a bunch of value, a high volume area in the middle like this, and especially if it's normally distributed and you've already tested this asymmetry, the next thing it usually does is sweep all the way through in both directions. A lot, often more than once. So the hardest place to enter trades and manage risk is going to be at the VPOC right here, the pink. I can't seem to point to it because it's bouncing around. So it locks to like highs and lows. And so this level here, 15,069, we're going to mark that as like an area that we really don't want to be entering. God, give me, okay, maybe over here. Can I get it? There, 15, that's close enough. We'll turn it color, we'll turn it pink. So that's the area I basically want to avoid entering trades. I can exit trades there, but I want to not enter trades there as long as we're balancing. Once we leave the area and we come back, it's actually a really good entry, but for the time being, we're going to avoid it. So what happened overnight? That's always a good question. Well, we came up, we tested where that asymmetry was, tried to hit this voodoo range level and rejected before hitting it, which should be a huge red flag if it's bullish. That should not have been hard to hit. And then we go under it, and not surprisingly, we're heading back for value area high. Now, we need to stretch this because this is still balance. We have not developed volume above this high. So, and as a result, the value area is going to shift, and so will the VPOC. Well, the VPOC shift, we used to be here at 69 or so, and it shifted up to 1592. So notice that's basically exactly on a voodoo range level. And that, again, shouldn't be a surprise because it was within the value area of a balance day. So we're going to pass through that level, yet it has a target on its back from the high frequency traders, apparently, it seems, based on my theory of why they seem to act the way they do. And we trade over and over and over it, back and forth, or one side holds and one side doesn't, and then it lifts, and then sometimes comes back and tests it and goes, right? Like, we know that's what usually happens, but we should also know, now that we've left the value area and it appears that we're returning to it, if we get back in here, we're at least going to come back to 92, and there's a good chance that we're going to come back and sweep all the way to the bottom. So the last thing we want to do is actually buy here. That's a very dangerous place to buy now that we've left and immediately come back. So what we're going to see is it sweeps all the way through, test behind this voodoo range level, which you can see we did a couple times and then broke over it, tested below it, closed above it, and then couldn't get there. Well, now that we got some volume and a spark from oh, I guess this is Wednesday morning, so it was just pre-market. Maybe there was a economic release here too. Must have been. I forget which one it was, but one way or another, you often need those to like break balance. And so it tried and it rejected. But note it can't get over this. And so if we get a red bar next, it very well could be heading back here. So note we continue higher. Note where the low was. We came back into the high value, the value area high, and bounced. Very normal. And basically trapped these sellers. So right away, let me go back to the 30-minute because there's too much going on there. So Wednesday. Okay, so there's the pullback, the bounce, right? This is our old VPOC. That's going to be removed. And then if we extend our value area drawing, where did that go? Should show me. There it is. I saw it up here for a second. There. So if we bring this to the open, now the value area is here. And you can see they pre-market, they closed one 30-minute in there, but they couldn't even close a second one. So 1 30-minute swept, totally normal. I know it looks big. That's totally normal. Like, it's not just sucking up this liquidity. It's actually expecting to come to the value area low, and it doesn't. It bounces and can't close below this voodoo range level. So where does it go? The next voodoo range level. If it can't close there, well, that's also the current VPOC. Once again, it's shifted from one to the other. And now when that one holds, well, now it's going to go back up here and sweep out those stops because, remember, we didn't test up there. So that's where it wants to go. And it does. So right away, we just get trend A up behavior, taking out all that liquidity. You can see here, we close below the voodoo range level, but we close green. So the rotation can continue. We're not worried about the volume decreasing because it's way bigger than the value area trading that we did yesterday, the balance trading. You can see the big bars there that like swept around back and forth between the value area. Those are lack of liquidity. That's why that's there. It's nobody defending the value area. So the volume that day, those, I'm trying to show you without covering it up, these look like some of the biggest volume bars. Well, compared to that, we're still putting in a lot of volume. See that? If I put that line right here, it's significantly more volume than we were putting in from the sweeps, the low liquidity sweeps, which means this is probably a trend on this time frame. We do continue higher. They give it another test. Here, again, volume is decreasing on the day, but if you look to the left, it's pretty much average for what we've been doing in a balance, right? And that's the important thing to understand. It's not just, and I mentioned this before, but I'll mention it again, it's not just volume on the period compared to volume before it, right? It's not just saying, this is not, you can't see this as weak. I know it's decreasing volume, and we learned that, a breakout on decreasing volume is weak. It depends what we were doing before and where we were, because look where we are. We're above it. We're above the value area, right? So if you compare it to the last time we were up here, which was there, it's average. See that? And again, these big sweeps were just through the value area. So that's resulting from illiquidity. It's a lack of traders defending that area. We should expect that to continue. And when they defend it on only one side, you get an extension. And again, that's usually the same direction as this, unless you've had a change in character, which we haven't. So it does go higher. Now this, I can't see it without, I wish I could make that disappear. We've got a big breakout here. And it comes right to the voodoo range level, like maybe to the tick. Let me see. 16. One tick away. Close enough. Like that was the target that they clearly wanted to hit. That's where they were looking to get. Probably way back here. The algos, the high frequency trading algos that seem to take things from one level to the next. Somebody clearly decided that that was the level to hit. Just like down here. Same thing. It's like once they reject that, if there's nobody following through, okay, that rotation is done. It doesn't mean that this low is going to get taken out. It can just consolidate and go higher. But to do that, we're going to need to know the difference. Now is where we start looking at volume. Can they get volume developed below this consolidation? If they do, we can come back to the value area again and sweep it, because nobody's going to defend the value area. I know they did here, but that was due to the open. And like I said, when they did that, everybody who was short had to get squeezed out. Well, if they come right back there now, I can pretty much guarantee that that low is meaningless. I know that's confusing because this low actually means something. This low actually means something. But when we're still traveling inside of this balance, these lows here are pretty useless. So, because no one's going to defend them. If we go from up here and come back into the value area, what value area means is that this low, the value area low, is basically priced the same as this from a value standpoint. So nobody cares. No one sees any difference between this price and this price. What they do care about is, are we below or above value? You could say, well, this might be decreasing volume, but when we look to the left, the last time we were here, those buyers had about the same amount of volume, right? We haven't been up here yet. So if it's going to continue in this same rotation without consolidating or pulling back, now we do need bigger volume. But just to break through these micro levels, these breakouts on smaller time frames into an area that we've already been to, we just need to do more volume than they did last time. That's it. And then we need to trap some sellers lower, which already happened, preferably with increasing volume just like that. And so all of the people that sold this wick are trapped, and they put their stops probably up here or up here. So it's just natural. They don't need a lot of volume to bring the market up there. But once that happens, there's no more liquidity traps up here. All that's there is you'd have to go back before this contract really did any business. And I'm not saying those levels don't matter. They do. But you're not going to be able to use volume analysis on a 30-minute chart to compare something from 2 months ago. That's just, no, sorry, not going to work. You're going to have to wait to see what happens when they hit it. That's going to be way more meaningful than trying to say right here, oh, we're definitely going higher because I have I don't know, something from 3 months ago or 6 months ago that says that this level was resistance or support before. No, don't get too wrapped up in that. You can easily break those. We consolidate, volume decreases, that's healthy. Now we want to stretch this value area in case we return. Now if we don't return, no problem. We just keep going higher and we'll bounce off value area high. But because we have this balance zone, we want to keep an eye of where our developing value is. And eventually this will calculate. Unless I lost internet, which is possible. Why is it not happening? Here, I'll go up to here. Hopefully we don't have to do it again. I don't know why it's not drawing. Like I said, unless I lost internet, which happens. Let me check. Sorry. I don't want to keep talking if we got cut off. And I'm having a hard time. Time's a sign that I am not connected. Let me just see if someone let me know on Twitter. No. Yeah, the longer this takes, the more concerned I am. But we'd be watching, while I wait for this to load and see if I'm talking to anybody, we'd be watching this level. Oh yeah, it looks like we're fine. All right, so these blue levels show us where the value is, where everyone agrees fair value is. So when we bounce off of it and go higher, that's bullish. We pull back right before, I think that is FOMC. We pull back into the value area, but close above it, but we close red. So if we go back in there, and note it bounced right off the voodoo range level, and that's where VPOC was before the sweep, the full sweep to the low, the value area low. If we sweep down here and volume dissipates and we bounce before this, we just need to get back above value area high again, and we can take out that high. But initially, we want to watch volume and these levels to see if we can close back in there. So you can see we didn't here, and then this was FOMC. So I was wrong. Yeah, that's FOMC. So this is pre-FOMC, I believe. Yeah, and then this was FOMC. So big volume, swept the value area, makes sense. You obviously would have had to look at it a smaller time frame to do anything with that, but the fact that it went where it did should make sense because we had that value area. So even on a 3-minute chart, it just gave this all up right to the voodoo range level, and then it couldn't retrace it. See how, like, even on the high time frames, those levels for some reason are important. Like I said, I just found them. I'm not the reason they're bouncing, but I don't know why defend them. I don't know, but they do. So, but look where we came to. Remember that red level that I pointed out before? So back here. Oh, is it not going to show me? That's annoying. Well, back there, we found that pivot and we tested below it and then rejected, going higher. Well, we came right into that pivot again. Wow, surprised I have it. I keep on getting, I might have to restart my router. That's annoying. We came right back into that pivot again and we held. See that? The value area we could extend to, see? You can see we close back into it. So back here, really nothing here compared to this, the last time we were there. And so the result is they exhaust it. And then buyers show up. And then we have even less volume going down because they're all stuck. So here, today, for FOMC, there, the big volume at the beginning, we go lower. We have a little bit less volume than the beginning. But again, what matters is when we go back to that zone the next time. Do we have more or less volume? We try to consolidate. This voodoo range level seems to be holding. Volume's actually decreased, even though we've been at this level before. So one way or another, we're going to need some kind of a pullback, and then they're going to need to attack hard to be able to get that back down. And then you can see here, the buyers worked really hard for this one, which makes sense. We now get through that with even less work. And we're making a higher high. And since we're in counter trend, all we need to do now, that's not a problem. All we need to do is hold that yesterday's close and then this big drop, which was illiquidity. It was people losing their shit when the FOMC report came out. And so when we go back through there, volume increases, which is healthy if you're about bullish. And if you look down here, we've got way more volume now than the sellers did. And if you look at the biggest sell that wasn't created by liquidity, I don't know what the issue is. Why it keeps on doing this, but let me see if it's continuing to record or if it cut. Okay, yeah, no, it's just cutting in and out. And so if we measure it up to FOMC, I don't know why I can't get it to show up. It's got to be my internet. And like I said, the only way I know how to fix it is to restart the router, and then I'd have to restart the stream. So, and I'm not sure why I've had issues with it, but this has been happening. This happened 2 days ago too. There we go. Okay, so that's the value area low. Here's the value area high. Before FOMC, we swept the value area. Totally normal. We bounce off the bottom of the pivot. Very exacting. Probably shorter time frame traders. Might not hold for a lot of days, but not surprised. That's going to happen. We expected this one to get swept. It did. We expected this one to get swept. It did. It ran out of sellers. We saw it on the smaller time frame. It looks like a lot of selling here. But again, if you look at the last time we were down here, there was more. See how this one has bigger volume from the economic release compared to FOMC? That's irrelevant. We need to get more volume to go lower. Either that or we need to trap buyers. And we just didn't do a very good job of that because up here, look, there's barely any volume compared to who got trapped down here. It's really that simple. They needed to trap more buyers to get more fuel if they wanted to take all of these lows out, particularly the ones that were outside of the value area. Whereas these are going to get swept with no trouble. And that's why you never, in my opinion, want to put your order, limit order to buy inside here unless you've already seen it move like this. Like if you've already seen this, then sure, take the pullback. But if you're looking at this or this and you know it's balanced or you're in a value area, don't bother trying to buy like that level. You're going to get swept a million times. So at the end of the day, the presser, he pulled back to previous day's close, which was convenient. And then the overnight low held on that pullback, as did this voodoo range level. And in fact, on the higher time frame, 15-1, 23-25, couldn't even get a close below. And if you see, that's what was holding pre-FOMC. So basically, there was a moment of panic, and we tested below the value area of the balance area. Nobody sold down there, right? I know it looks like a lot, but we looked at the smaller time frame, and down here, there wasn't anything. And so the result is they go back to where we were before. And again, people get messed up because they see volume decreasing as we're going up. And you see this and they're like, oh, I got a short. Well, you can short up here and target this. That's not awful. But the fact that we've swept the entire value area both ways and now we're bouncing off of it and going higher, it's probably not bearish. Just like this was probably not bearish. Not yet. I know eventually it did become bearish, but at this point, the only reason it went down is because of the FOMC release. If the FOMC would have been bullish, it could have just skipped this. But despite the fact that people saw something bearish in the report, we still bounced off of this previous low. And so the result is they're going to have to go higher. They're not going to spend a bunch of time back in here because it's already been auctioned. And we've already gotten the bounce. And now this is the liquidity sweep. So if you had the opportunity to buy there, if you had the opportunity to buy here at the VPOC of the value area before FOMC, it makes sense. See how they bounce like right there? And then it goes higher. Yes, volume decreased because we're not breaking into new territory. We've already been here before, and the last time we were here, we had even less volume. So really, volume is actually increasing from last time we tried this. See that? I know it's decreasing from the previous ones, the previous periods, and that, if you've been taught how to buy breakouts with penny stocks, you learn that that's bad. Well, this isn't a breakout, not that kind of breakout. This is just bullish. It's a trend that had a pullback, and if the less volume it needs here, the better. But the fact that it has more than the last time is all it really needs. It could have done it with this much volume, but it had plenty. That's all I'm saying. Now, when it breaks over this, what we want to see is an increase in volume. That's where the volume needs to get in. And if it doesn't, it's going to pull back and probably test wherever the new value area high is, which is here. So probably 15,150 is probably where buyers will need to show up to hold that. And if they don't, we're just going to sweep right through it again. So realize that this sweeping can happen once, twice, 3 times, 4 times, 5 times. It can go over and over and over again. It doesn't have to stop. And in fact, it can fake breakout, sweep, go a little higher, fake breakout, sweep, fake breakout, sweep, right? It's just balance on a higher time frame. All that means to us as day traders is, first of all, longs are probably going to be easier than shorts because they are bullish on the higher time frame. And then no matter whether you're going bullish or bearish, if you just want to ignore the orders, that the triggers that show up in here, you'll probably do better. You might not have very many trades, but if you wait for these tests beyond the value area and then wait for these big swings, or else trade with the trend when you have a chance of breaking out of it, you're going to do so much better. See, this would have been okay to trade as a breakout as long as you're only looking for 20 points. And then if we back it out and we put the value area where it was before, this breakout also works just fine if you're looking for 20 points. And we got big volume on it. It just didn't have follow through, so it pulled back into the value area. And once it does that, you can just kind of ignore it, because trying to trade in here is going to cause you a lot of strife and make you lose a lot of money, unless you're very, very, very good at flipping back and forth and knowing when not to do that, more or less. Because it would have been pretty tough to guess that that'd be low. And I guarantee you that it triggered here and here to go long. And you could have easily put your buy order here and gotten swept too. The basic rule of trading inside of the value area, if you want to know, is you must stop out somebody before you can take trades in that same direction. So if you want to buy, you need to stop out buyers. The best way to do that is to go under the value area like this. That's your best trade. Your alternative is a low like this, getting swept and closed above. Now you actually have a chance of leaving the value area. If you didn't have that, and instead you were trying to trade this on the 5-minute chart, you're going to buy this, you're going to buy this, and you might buy this and get totally wrecked. Not to mention up here, you could buy this and be okay because it swept some of these. But other than that, try to buy this breakout, get hosed. Try to buy the pullback, doesn't go, get hosed. So the easy thing to do, like I said, is just to avoid trading in that area and just wait for the outsides instead. Wait for the edges. until the bulls come back and establish volume in there and above it, and then come back and test it and bounce. Now you can start, what's it called? Trend trading again. But you don't want to be buying breakouts inside of the value area. And you also don't just want to indiscriminately buy dips. Because if you see this as a dip, well, you get broke. If you get this as a dip, you get beat. If you see this as a dip, you get beat. Unless you can put your stop under this. Under this. See, that's the thing. Even this dip doesn't do it. You'd have to wait, not get filled, see them reject, and then follow an aggressive trader in way up here. So, like, if you think the only way to make money trading is to buy this wick, you're looking at it wrong. That's all I'm saying. I really feel strongly about that. You don't need to buy here, or here, or here, or here, or here. You can do just fine ignoring all of those and waiting for the confirmation and the pullback, and now start buying dips and just take this. I know it's not as big, but the consistency is going to be way higher, assuming you're getting out of a value area. So same thing here. If I extend this to a higher time frame and we bring value area to where it is now, what you're going to see is while this low might have been pretty tough, once you sweep back through it and you close above it, which has happened, well, now if we can get a low that holds and then it starts being bullish again, and especially if we can then take that low out and go higher, just keep trend trading because it's bullish. The hardest thing to do is to try to short this and this and this, right? You can see if you go to the right and sell that area, a lot of times it will work, but then a lot of times it won't, like here. So, and in my opinion, it doesn't work 50% of the time. So you need more than just a location or a swing to say that, like, that's where I'm going to fight the trend. You need order flow. You need proof. And order flow is based on things like pace, volume, range, stuff like that. Things the algo looks at. So I'm going to take a quick break, and then we're going to come back and we're going to take a look at the algo today. We're going to see what the algo would have showed us as far as like what works and what doesn't. Now that we have a clear view of like what the candlesticks showed us and where maybe it might have been tricky based on that, we're going to see if the algo would have solved some of those problems. So I will be right back. There we go. I forget how to unmute this thing. Apparently it's not the same as how to mute it. Oh, there we go. I don't know. Must be bumping it or something. Okay. Well, believe we are back. So let's put the live stream back. Okay. So as usual, we're looking at NQ. We can, if someone wants to look at CL, we can. I've been trading primarily the 15 tick Renko chart, but when it's fast, the 24 is a lot easier to process. And then for higher time frame ideas, the 67 and the 40 are both useful. So, wow. Ring, triangle up, ring, triangle up. Beautiful. If anyone's watched some of my other ones, that's one of my favorite setups. Pretty cool. So higher time frame, Wednesday. Higher time frame, overnight, you can see we started with a star at the end of the day, which is pretty powerful when it's, see when they're down here at the lows down here at the light blue. Not always. You can see this star did not produce an extension, right? And when they're up here, they're very dangerous. When their star's up here. When they're down here, it likely means we're at least going to go to this midpoint. But whether or not we actually take off here is going to be dependent on like higher time frames and other things. But when they show up at the lows like this, below that, and you can see remember the yellow line. And again, for those who are totally confused by all this, like just watch some of my other streams because I don't want to stop. I don't want to take 3 hours to explain what all these signals are. But the important thing is just that you can see them. It doesn't matter what they mean, but it really doesn't. But just know that's the order flow. But the yellow line is where it's the VPOC of the bar. So just that range, and again, they're Renko. So this is a bull bar, meaning it got to this level before it could go in the opposite direction in the same amount. So on this one, 67 ticks. So it went 67 ticks up before it could go 67 ticks down. But it left a wick because it tried to go down just maybe only 60 points or whatever. And so since it went 67 up before it went 67 down, it prints bullish with a wick on the bottom. And again, when we see this way at the bottom of this Keltner channel, and it's got a star, especially if it's followed by a triangle up. For me, they're white. On Simon's, they're orange, but I need my signals to all be color coded. Like that's just, I don't know, my brain is weird like that. Like I like them all the same color. Like bullish things in my mind should be like white and green. And like I just got colors that I like blue. Like I associate that with buying. So it's confusing to me when they don't all match like that. Like for me, that's just the way I like it, which is kind of nice that you can customize that. But they've sold really big. You can see this is the accumulated volume into the low, got underneath the channel, gave a star up, followed by triangle up, and then volume shifted down as price shifted up. It happened on the pink bar. We talked about yesterday how when you break above that, chances are it's bullish. So if you didn't get in here on this pullback, you'd know. And again, this is a very high time frame. So when that's happening on that high time frame, note what you have here. Ring, triangle up at support. It's a good setup, even all by itself. But this is basically saying that we also have higher time frame continuity because on the higher time frame, we actually have the same conditions as this one. And the location is correct, which is super cool. So when we see those things work together, where you have the star on the low followed by a triangle up on a higher time frame, And then on the lower time frame, you get a pullback and then an entry signal, such as star triangle up or ring triangle up, or getting underneath a green bar and pulling back in, or the blue dots that's following a pink bar like I talked about yesterday. That all of those things happening when this is signaling bullish is a great sign that not only might you have a 20-point scalp like this, but if you hold, that low might actually hold. So you can see over, well, this is yesterday. Where's the other one? Yeah, so here is overnight. So we had another one that touched the, you can see at that same time, ring, triangle up. This is not the same. It's just, it literally just looks the same all the time. And then green, get under green, close back in, get a triangle if you're not sure about direction, you get a scalp. Now, this time, this was green. We got under green, came back in, star, triangle up, I assume. Yep. And pink is even better. So that's an entry. And then because it's a pink bar above the dotted line, if it pulls back and gives us a blue dot, it's also an entry. Pull back, blue dot, entry, long. So you had this one, or this one. 3 chances to get long down here after the purple bar came into the Keltner channels. Now, we didn't know that it was going to be a star until 61. So you'd have to identify, you'd have to have another way, like location or order flow, to know that you're looking long here. The easiest way on my charts is find a yellow dot, or pink, and it closed bearish. And as you can see here, the yellow line got under it, well, barely, but it closed bullish. So that's perfect. The other thing to watch that Simon was talking about today in the room that I love is 2 things. First of all, it's hard to turn the market when we can't get any sellers at the lows. So while yesterday I was talking about shifting volume down to go lower, one reason why that technique will eventually fail every time is you also need to shift volume lower to trap sellers. So you can see back here, the biggest volume player was up here, and they got a nice rotation down. And what I said yesterday is that if you just lift up here and try to go lower, you're not going to get much success if you don't put in more volume, thus shifting the developing VPOC line down like this. But by doing that, by putting in more volume down here, you're also risking trapping shorts. So it's tricky. It's like you need volume down there to like break down, but you also, liquidity, volume shifts lower. Not surprising, right? Because it's going lower, price is going lower. Now, they already tried that, and the result was buyers showed up. They tried again here, and again, if we can get up here, we know it can lift. And we did already once with price. We just need to get volume up there now too after defending this low. So they defend the low, they shift volume in down here. Now we need buyers to show up to trap this guy because we've gotten them underneath. The green bars, the outlined green, is basically the opportunity to trap, but you need to usually get under them or make a higher low and then lift. So here we got under them and they made another green bar, which is great. So we trapped sellers at this low, and then they aggressively defended it. Pink bar up. We're headed up here. They come into that level, and they defend. And that should make sense. Something I've been watching for is the orange and the green inside the candles, the bars, meaning that we have a shift in volume where most of the volume is shifting with price. So here volume was going up, but now volume and price both shifted down. Sometimes the market turns that way. It helps if the volume is heavy, so it'll usually have a purple or pink diamond on it. But the other thing I noticed yesterday, and I don't know how consistent this is, but I'm going to watch for it, is how these bars, the green and the orange, I can't see an example. Here's the green over here. So the green bars and the orange bars play very well with the speed traps, the diamonds. And when they don't, you can get that pink bar to be above the dotted line. A pullback that's got a blue dot and closes bullish, especially if it gets a triangle up, is usually a bullish indication. So this low, while it might get tested under, it's very rarely going to get sellers underneath it once you've done that little graders at the lows. So what he recommends is star down and then find a pink bar with the triangle up and then get above this with VPOC like that. So, and oftentimes it's not just the first triangle up, it's also the second. So like even this one can do it. But really what has to happen is we have to get above this guy. And if you, most of his volume was here, but you could also use the volume bar from before it because that's the guy who he technically attacked. So here is where all the volume was before this big player came in, right? Or you can, like I said, you can use this one. And so we just need to get above that with volume. So look at the yellow line, and it needs to be a bull bar. Happens right there. Triangle up. So once that's occurred, once you've gotten that, we're going to assume, again, as long as there's other reasons to think this might be the low, like volume shifting down, getting above a yellow dot with VPOC of the bar, and then a buy signal at the lows like this, aggressive traders at the lows, not getting beat when they defend. All of those are things we see at the lows. And then higher time frame being at the right location. We're not trying to do this up here at the top of the Keltner channel. Heavy buyers, we're only trapping sellers. So if you can see that, you're gonna do fine, because now you can take things like 2-bar combos, purple bar, green bar, purple bar, star up, anything like that you could take. Blue dots on mine are generally good. You basically just want to see price and volume hold and not develop volume down here. You can also look at the indicators at the lows or below the price, and you can see here we had a higher low at ring triangle down, which we know is usually pretty good short at a resistance, but this one's going to fail, and sometimes they're going to fail. Sometimes you're just wrong about direction. It is at resistance, but unfortunately on the higher time frame we're not at resistance, we're at support, so it doesn't work. When they don't work, you can get a really big lift, because while I'm looking for the signals, other people are seeing the exact same thing here and identifying that it looks bearish. So when that gets beat, your opportunity to the upside is strong, and you basically just want to buy this. See that? So you might not want to buy the breakout. That's a little dangerous unless you're going to put your stop down here. But if you see a trade that you trust works a lot, no matter what it is, using the algo or using anything else, if you see something that you're like, wow, that looks like that's an aggressive sell and people are following them in, this looks like it's going lower, and suddenly it turns and makes a higher low and a higher high, yeah, don't be this guy. Don't aggressively fight in the same direction as the guy that just got beat, because it's bullish now. I know that works sometimes, right? Taking a stop and then continuing lower. That's what they're trying to do. That won't work if you're building buy momentum. And here you definitely are. And you've got a trade that usually works. It shifted volume up. It got a purple bar. Everything looked perfect. And they shifted volume down, and instead of going lower like they usually do when you see that combo, they put star up, triangle up. And it's just like, oh no, we're not going lower. So you want to flip at the very first opportunity. That's actually where these blue boxes come in handy. I don't use them very often for like immediate triggers, but if I already see that there's a seller trapped, they are usually, or either that bar, or especially if it's followed by a triangle up, it's usually a safe place to get in. And you can usually, you don't want to put your stop right under them, but like once I see this, you can't hear, let me get rid of this. That little blue box in there says that this is an area that's been fought over, and the buyers are actually like showing up. And that doesn't matter if it's bearish, but when it looks bullish, like with a head and shoulders kind of thing or whatever, a higher high, higher low, those, that can be, if I see here, I don't have a star. I got the diamond, but even if I didn't have the diamond or the green bar, the blue box there becomes a good alternative, especially following a purple bar. So, or an arrow actually is pretty good too. So we break out overnight and we just continue to break through all these. So see ring, triangle down at resistance with a shift up. That's usually bearish. It's not. We're probably going higher. Usually. It ran into previous day's point of control. So yeah, don't buy if your resistance is right above you. It did do what you would expect. It went to, it just wasn't very far away. They put in an X and trapped him, and then purple bar, like this one wasn't touching the line, or sorry, this one was touching the dotted line. Big aggressive seller. Purple's not touching the dotted line. If it pulls back and gives you a yellow dot, that's usually a sell. And so like this is usually a sell. But what I'd be expecting is that one of these lows is probably going to hold there. Whoops, I went too far. So while it looks bearish for a moment, because the bigger time frame has trapped sellers down here, and star down got trapped. So this guy, like here, particularly this, becomes new support. And so that's what Simon was showing us this morning. That like, you might have to be a little patient. Like, it's not bearish. So see how this yellow box is showing up here, but it's not necessarily a good place to sell because it's just not, we're at resistance, but we've got this guy trapped, right? But we're not making lower lows. We're making higher lows. We're consolidating. Those boxes don't work consistently in that situation. If you're looking for a turn where you want to get in, but if you already know that that's the location you want, and you just need a trigger, it's usually a sign that someone's showing up there. I mean, what this says is that this is a contested area, and this seller closed a sell bar there. I don't really care about that because we're just consolidating here. But if back here, it might be helpful to know, like here, I guess it's not that useful, but here, it's good to know that this was an area that was contested and it's clearly bullish. And now I've got a bullish close. That's what it's telling me. So, and I made that one myself. It's not that complicated. It's just to give me an alternative, assuming we're not chopping, an alternative entry for when I'm trying to join a trend at like a location that they finally won, right? It used to be sellers and now it's buyers. And then here, ring, and then at that support, you get triangle up. That's actually a good scalp too, and that usually means that this low will be defended. And when it is, triangle ups will start to work. And then orange bar, green bar, right? Those, like I said, work very well with the diamonds inside the bar. Now in this case, we hadn't beaten him yet. But once we beat this guy, is the way I think it works. This is now better. The diamond up here becomes really good. I know it came to it, and they couldn't get any volume down here. See that? This volume went up, and then volume tried to go lower, and price went higher. So if I mark where all the volume was at this fight, we can't get the yellow line down there. And so that's bullish. And so now I just need a trigger. And these diamonds work really well for that. And so that lifts. Okay, this green one as well did not get trapped. So diamonds are going to the upside are going to continue to be good, and most likely diamonds to the downside are going to fail. And here, let me see that if I can find that pattern before. Here, so this one, do we have an orange bar? We don't. We have stars trap, but that's it. Okay, so this is still overnight, right at the close, actually. Okay, so orange. I'm kind of surprised. I guess it's bullish. So it was the preview. It was this one. Yeah, that's where it gets confusing. This one getting trapped makes this diamond work. And this diamond fail. Because the green is not trapped. We're not under the green bars. We're above them. Once we get under the green bars, the red diamonds will start to work. See, this came right after an orange bar again, and it looks like that could be a reliable signal, but I don't think it is. See, like this, unless you're above another one. That's what I'm finding. Because I made some mistakes earlier. When I noticed that, I started taking it just seeing orange diamond up, thinking that that would do it, or green diamond down. It doesn't work that easily. You have to, I believe, trap someone first and then get it. So the fact that they're lined up like that, it just means that the next diamond's probably going to work. And like here, if this one works, the next diamond will work to the upside. And see here, green diamond down, it might work. Yeah, it does. Interesting. Like I said, I do see that combo working. I guess I could look at when it doesn't work. I know that's not why I made the stream today, but I'm curious. Like here, it goes lower first and then traps them. It doesn't trap them right away. It is pink and green. Interesting. This one is not pink or green. Oh, and it went underneath this. See, they had to dip still. Where's the other one? Here. Orange. Yeah, they didn't get under anyone that time. I'm surprised that worked. And then here, they got underneath, and then they go. Here, get above, and then they go. So maybe it's not that it's orange or green. It's just that it needs a low that's lower than these other ones that are purple and pink. That might be more than anything. Like this one probably would work better if it had a low lower than this, but it did get lower than that, so it still worked. This one, I guess there's no pink or purple, so it doesn't work. This one's got a pink, got lower, diamond up. This one didn't, got under this purple. Why doesn't that work? I mean, sometimes they're not going to work, but here, what about this one? Pink, get under it, diamond. And look, they had to wrestle with it for a minute yet. Hold on real quick. Hold on. Yeah, I don't know. I'll watch for it. But for sure, when the low on the diamond bar is lower than a pink or purple bar, looks like, and you're going in the direction of the trend, it looks like it is working better. And maybe just what I notice is that when you're going in bullish direction, the orange bars just get crushed. Oh, these have dots on them. Hold on. Oh, this one didn't. It still worked. Yeah, I don't know what else. It's POC is dropping into it. Could that be what it is? So price and volume are dropping. What about this one that yeah, so this one volume went up and volume was kind of already low at that point. And then here too, price was and volume. That diamond does not one, but yeah, volume price dropping. And then here, only at that bar. I don't know. For sure, when the green bars or the orange bars get beat by almost anything immediately, it seems like you can get a trade-off. That's kind of interesting. Like, but here, green gets beat by orange, and then orange gets beat by star. So you can't just short that. It's got to be at location too, I think. So orange gets beat by green, and that doesn't work up here. But now you get under that, diamond goes higher. And then at location, see this too, not at location, but this one is. We're at the low. And then I guess one works like that. Wow. So is there anything that could have protected you from like obviously taking the first one's a little dangerous, but how do you protect from this other than just maybe the time of day? We did not make a higher high. We did shift volume down. Did we trap anybody aggressive? We couldn't get under this blue dot. And then we couldn't get under this blue dot. Yeah. Interesting. But then this, yeah. Volume shifts up. Everything else looks right. Oh, no yellow dots. That's interesting. Only blue dots, meaning it's probably bullish. But then this one doesn't get a yellow dot. Oh, well, I guess you could wait till this. Bullish bar, diamond, triangle out. Yeah, that works. So, yeah, this might see. Oh, and then the gold bar right before the ring, triangle down, helps. That's cool. Okay. That's good to know. Divergent bar. So see, we trap this guy here. And so I would expect this to work because we've gotten underneath a green bar. And then orange bars and diamonds start to work unless you get underneath or get above it, above a orange one. So here too, ring, triangle up at support does not lift. But then this one doesn't give you a triangle up. Probably wouldn't take that. Wow, again. So it's just firing a lot. So here it's got dot. Here it does not. Oh, here it does, but no triangle up. Here it got delayed and no triangle up. Yeah, like, but it gets choppy like this, it might not work that well. And see, you didn't get triangle down either after the diamond, so that is a problem. Here you got bullish bar, diamond, triangle down. Oh, and it fails. Ring, and then triangle up delayed. Works. So, like, I could see why not to take this one immediately. Oh, and then you got a bearish bar below it. So, and then no triangles at all until here. So you certainly want to wait for that triangle before you take that trade. That's good to know. And then ring, triangle down. But is that resistance? Yeah, kind of. And that one doesn't work very much either. Ah, but then the next one does. So maybe that's just not, maybe it can't be resistance from a long time ago. It's got to be recent to be good. That second triangle needs to be like close to the ring. That could be. Because really what you want is ring, triangle, and then another triangle. That's your best trade right there. Okay. Green, orange, get under orange. So now, no, get under green. So now diamond should start to work to the downside, not to the upside. I would not take that. Yeah, see it can be tricky, but if you keep track of it, see orange is working, green is not. Orange is working. So like this, I would think if that produces a triangle down, it'd be good. Triangle down. Wow, ring, but no triangle down. diamond, triangle down. There. Yeah. So see, you can't just rely on the rings. You need the triangles. Cool. Good to know. Try to lift it. Okay, look, they shifted volume to the low. And then all they could put under that is a purple bar. And we know if this happens at resistance and then it goes lower, it can be a extension, but at support, but this looks like it might be developing support. You might get a lift here. Purple bar, blue dot is a pretty good long. Yep, and that gives here